Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So in this video, I'm going to reiterate what velocity banking is and is not. So some people come to this channel, they see velocity banking and they get really, really angry. And I kind of empathize with them, right? Because when I first learned about velocity banking in 2017, I was only making 20 grand a year. And the way that was presented to me was like, pay off your mortgage in 7 years or something like that. And I'm like, what are you talking about? I can't even like get a mortgage. And then later on, I found out that 90% of this country can't get a mortgage either. So, and this was like pre 2019, right? Like it's been true for a very long time that most people in this country cannot get a mortgage. And so when I first heard about the strategy, like pay off your mortgage in 7 years, like I'm never going to be able to even qualify for a home, right? And so one of the things I want to make clear or emphasize is that velocity banking is not an income generation strategy. So I'll just say right here, velocity banking is not an income generation strategy, right? It is a debt slash cash flow management strategy. And so what happens is because, we can't filter out who watches these types of videos. People come into the velocity banking videos and they get really angry. It's like, well, what about if you don't make many money or if you're poor? And what you have to realize is that because it's a debt management or a cash flow management strategy, you have to have some debt, right? So if I have $3,000 of income and $3,000 of expenses and absolutely no debt, like what do I need velocity banking for? It's a debt and cash flow management strategy. Now, here's the other thing too. If you don't make any money unless you absolutely lied on your credit applications or you did something stupid like get a student loan, right, which is federally guaranteed by the student government, which is why they never underwrite anybody. Banks will not lend you money unless you have income, right? Because let's go back to the first point right here, and this is what we really have to understand about credit is that banks don't lend money to people who need it, right? And if you understand this concept, which most 99% of the population does not, and that 99% figure is made up, um, you'll understand how you can get access to lots of capital, right? This is why I have over $258,000 in lines of credit available for me to use because I got the credit when I did not need it. Okay. And if you don't have income, most banks won't lend to you, right? And so if most banks won't lend to you, then guess what? You're not in a position to do velocity banking. So let's just kind of think about the different steps or stages of life that we're at. So step one would be we need to make money. And then step two, get into reasonable debt, right? Don't do something stupid like get a student loan, right? So that debt, the reason why we borrow money is to help us manage our cash flow. But one of the problems is that people borrow too much and it ruins their cash flow, right? So you just get into a reasonable amount of debt. And then at this stage two is where you would apply velocity banking, right? Which is where when you're making when you're doing step one, making that money, and before you get into debt, you get the credit, and then once you get into sub debt, then you apply velocity banking, right? And then step three would just be build wealth. But the problem is the reason why so many people get angry is because they're at step one and then looking at step two, and they don't think they'll ever get out of step one and get to step two, right? And that's how I felt when I first learned about velocity banking. Is like pay off a mortgage in 7 years. What are you talking about? I can't. I'm never going to qualify for a home. And then magically, I qualified for a home like 3 years later, right? But the reason it made me angry is because it reminded me I was poor. It's not because the strategy itself doesn't work. It reminded me I was poor, and I always thought I was going to be poor forever because I was unlucky, right? And there was a bit of unluckiness to it, and I think you know from generation to generation, nothing of value was taught to our generation, which is why so many of us are struggling, right? And so and so that's why it's important to mentor other peoples and actually teach them to succeed, or else you're going to have a society that's, I don't want to say collapse, but that's essentially become a failure, right? But again, in order to do velocity banking, you have to make some money because it's a debt removal strategy. And if you don't have any debt, you're probably poor, right? Or you're really responsible with your money. But the only way that you can get into debt is if you have some income, unless it's a student loan, because banks don't lend money to people who need it. And the problem with most people is they think about getting a line of credit once they're they need to do the velocity banking strategy. And this is why when I do these demonstrations with velocity banking, I always tell people, look, get all the credit you can get before you ever need it. Like if I'm doing velocity banking, and let me just kind of go over this quickly, you only need two things: a budget and a line of credit as your main operating account. So as you can see here, I have my classic 10 credit card example. So this is what I call the stress test, because you want to always test your assumptions in the most extreme environments, right? And let's say you have $10,000 of income and $9,000 of expenses and $167,000 of credit card debt. Do you think banks will lend you this amount to borrowing credit cards if you're not making income? No, they will not, right? They will not do that. So you have to make income. And the funny thing is, I've had people email me almost a scenario close to this where they made 10 grand after tax and they're still broke, right? So the part that offends people is that when they're at step one, because of how society conditions you, most people think that they can never make more money than they can make right now, right? And if you're at a point where you're like 90% of the population can't get a mortgage and you don't make enough money, guess what? You're not going to even get into debt because the banks don't want to lend to you, right? See, here's the thing: banks are kind of like big pharma. I mean, think about this. If you're too poor, banks don't want anything to do with you because it's like being too sick. If you're too sick and big pharma gives you the medication, um, you're kind of worthless to them because and here's the thing: they don't want people who are too rich or can pay off everything like Dave Ramsey, right? Because they're not going to make money off of you. Same thing with the banks. Same thing with the pharma companies, where if you're too healthy, how are they going to make money off of you? So what they want you is kind of in the middle, right? They want you making some income, maybe good income, but they want you kind of be bad at managing it, right? And this is where the step two is. So let's just go here, and we're going to assume two things, right? So same income, but we're actually going the opposite direction of no savings, right? And so let's go ahead and do that. And what we're going to do is transfer some debt to increase our cash flow. And let's assume we have a $200,000 line of credit, which is our main operating account instead of our checking account available. Because what we're going to do with the velocity banking strategy is put our entire paycheck into that line of credit, expenses out, and rinse and repeat over and over again. So let's move this $167,000 of credit card debt, right? And remember, banks don't lend you money if you don't have income and if you don't need money, right? So there was a certain point where we were making absolutely good income and we had no debt. And the bank realized, oh my goodness, like this person makes great income. And if he doesn't know, let's give him a ton of credit cards so that, he can make minimum payments on all of them, right? But take a look at this. So let's move all this $167,000 credit card debt right here. And then if we do that, then all of these get paid off. So 0, 0, 0, 0, 0, 0, 0, 0, 0. And then we magically went, actually, let's take a look at this. So we magically went from $9,000 to $4,000, no savings, and we're going to have our cash flow, right? So 355 to 5,700, and then we dump our entire paycheck into that line of credit, take our expenses out, and then rinse and repeat over and over again. And let me just quickly do this formula right here. So it's I2 plus 1, whoopsie, plus 1, okay? And then G2 plus I2 or H2 minus our cash flow, which is 5701.35, is the next month's balance, right? And then what you do is you calculate the average daily balance right here, get the average, multiply by 0.1, which is the interest rate, and then divide by 12. Oh my goodness, I do this so much that I pretty much have it recognized from the back of my hand. And then if I just go ahead and copy and paste these formulas, oh my goodness, take a look, 34 months, everything paid off. And how much is 34 months? 2.83 years. So I paid off all this debt in under 3 years, $167,000 of credit card debt. Now, the reason why, if you see this, it would make you angry, is because you see this big income and you realize you're not there yet, and you're getting angry about like you not making enough income. Now, if you're not making enough income, that's not what this strategy is about, right? This strategy is about once you're making that income and you have some debt, how do you manage that cash flow? How do you pay it off quickly, right? Because the more debt you have, the more it takes up your cash flow. And then, every little debt is kind of like a hole in a bucket. And what we're trying to do is we're trying to patch the holes in the bucket. But the problem is that if you're angry at this, you're angry that you can't even get water into your bucket. You see what I'm saying? But yeah, so this is why um, people get angry, because they're not making enough money. And then when they see something like this and realize how it could help people with money, they have a mindset or belief that they're never going to be able to make more than they make right now, right? And I know I've been there. Like I didn't think I'd ever make the money I made now. In fact, this is what I thought, because I used to make 20 grand a year. I was like, man, if I make 50 grand a year, I'm invincible, because I'm learning to live on 20 grand a year. And ironically, the more money that I make, and I don't mean to sound ungrateful, in a way I feel poor. And I think the reason I feel poor is because the more successful you are, the more people will avoid you, because they know that you are successful, and your success kind of brings shame to them. So they don't want to admit it. But yeah. Okay. Well, this is Korean Atlanta Mentorship. Just a review about why, velocity banking um, might piss some people off. There's other reasons why it'll piss people off, and I'll go into other videos. But if you're interested in joining our group, go ahead and click the Google form link below. Other than that, have a great day, and we will speak next time.